What is going on, boys and girls? It's the Short Bear. Today we're going to talk about MBIO and FBIO. So as you know, on Thursday I played both of them and I had my biggest day ever. Now it isn't luck. I was prepared and I researched everything about both companies, and that's what made me really size up. This was the best opportunity in the past month or months even, I would say. Just based on the amount they could dilute, the amount it was up, the amount of bullshit they told us in the news. Just everything came together so that I had a pretty good idea what they were about to do. We are going to start with the analysis of the MBIO news, all right? And then we're gonna talk about everything regarding the filings, the technicals, and everything else. So the news on MBIO is this one. So they posted it. MBIO is Mustang BIOS. All right, the stock soars nearly fourfold, so up 260% in the pre-market on Thursday. The news is, so the biopharmaceutical company said it entered a licensing agreement with St. Jude, all right? So that's what we're going to write down at first, all right? And they also say, so we blah blah, licensing agreement with St. Jude to develop, all right, the gene therapy for the treatment of bubble boy disease, and that's the name of the disease right there, right, for commercial use. And they also have data from the phase 1/2 from the clinical trial for their drug, basically for the same thing. So we're gonna write down licensing agreement, treatment of bubble boy disease, and the name of the disease, all right, and the phase 1 and 2. Once we know that, we want to check if it's actually recycled, all right? So in the filings, they're going to try to use the more complicated words, so you're not going to find, or not likely to find the word bubble boy. So we're going to take the technical name for the disease, which is XSCID, and we're going to copy and paste it. So we're going to copy it, and we're going to look for the filing with the most information about a company, and that's the 10K, all right? So the financial statements, and you're going to see the last financial statement is the 10K, so we're going to click on that. And we're going to Control F and take the name of the disease. So as you can see, we've got quite a lot of, or not a lot of hits, actually, and we're just going to look at what they're saying. So in partnership with St. Jude, blah, blah, for the treatment of exactly that disease. And we're gonna try to find some kind of date, actually. So right here. So that's they're basically telling us exactly what they did, and you're gonna see it's actually started in 2018. So right here, 5 patients were from the age of 10 to 23. And the first trial was published in 2016, all right? So it's not a new drug. They're actually working on that since 2016. So that's the first thing you want to keep in mind. So they started in 2016. And after that, you also want to look at if they published some kind of news or PR or anything about that drug. And actually, Mustang BIO, so MBIO, presented results from that drug in October 2018, all right? So that's Mustang BIO, and that's a corporate presentation from October 2018. And if you actually scroll down, let's see where it is. So if you scroll down, gene therapy right there, collaboration with St. Jude around that drug leverages the talent of our team, blah, blah, blah. So actually, they already presented results from exactly that drug, which they basically put out as being this new awesome drug that they now develop, and it's gonna, so it's gonna be a big jar and commercial use and so on and so on. So they put it out as it were basically, or if they put it out as if it was a new drug or something awesome. But actually now you find out, all right, it started in 2016. I'm going to show you something else too. So if you look past that, you're going to actually see, where is it? Let's see. Show you something else here. So right here, in August 2018, we entered into a licensing agreement with St. Jude. We paid an upfront fee of 1 million, all right? So they actually paid only 1 million for that drug, all right? 1 million. And you also find out that the news, all right, or the actual drug has been presented already in October 2019. And now you also want to look at, is the market big for that drug? Because you need patients to make money. So you're going to type in how many people get the disease, and you're going to find out 1 in 50 to 100,000, which makes your customer base is right around 4,000 to 8,000 people if you divide it by the population of the world. 4,000 to 8,000, and that's if everyone takes it, all right? If everyone takes it. So now you kind of get the picture. They only paid 1 million, which is really nothing for a drug, for the licensing agreement, 1 million. Then you have the data which was already presented in 2018. Your customer base is really small, basically nothing. And the stock is gapping up 200, or actually moving in the pre-market by 260%. The worth of the company just over doubled, and they have basically no news, all right? No real news, nothing new, nothing that will make them money. They have nothing, all right? So now you know, so you wrote down everything for the news, all right? Now you know the news is absolute bullshit, all right? They have nothing. And after that, we're gonna look through the filings. So we're gonna stay with the 10Q, the 10K I mean, just because the 10K was published or ended in December, so at the end of December, and the 10Q ended in September. So December, September, you've got 3 months more of data in the 10K, so we're gonna stick with that. The new 10Q should be out soon, I think. And we're gonna find the cash, all right? You're gonna scroll down until you find a table. That's not the one that's the cash flow. You actually want the, where is it? Here. All right, so the balance sheet. The cash, gonna take that number, so 16 million, and you're gonna write it down. 16 million cash. Actually, the first thing you want to do is look at right there, the outstanding shares. It's on the first page. Right here, outstanding, and you want to write down when it was outstanding, all right? So let's find the table again. Right here. So you wrote down the cash, and after that, you're going to take the total current assets, 35 million, all right, because it's in the thousands. Sorry. And you're gonna divide that number by the total current liabilities, so 5.6 million. And you're gonna find out the current ratio is 6.25. So it's what I call it, it's what it's called current ratio, so the total current assets divided by the total current liabilities. You're gonna take those two numbers we just talked about, so 35 here, and you're gonna subtract that number, so the total current liabilities, and you're gonna find out that it's 29.508, and that's called the net working capital. So the total current assets subtract the total current liabilities off of that, and you're going to find out the net working capital. After that, just right here, just a few lines below, you're going to find out the accumulated deficit. That's what you're going to find, and you have the number 79 million, so you're going to write that down, 79 million accumulated deficit. I just put it as ACC, so accumulated, just an acronym. After that, you want to compare the cash with the cash burn. So you're going to type in cash flow, right? And that's the cash flow for the years ended 2000, so December 2018 and 2017. And you're going to look for operating activities, so total cash used in or provided by the operating activities. And as you can see, they used cash, they didn't provide anything. So that's 19.244, so 19,244,000. And you're gonna divide that by the amount of months that this is for. So actually in the 10Q, you're gonna see for the 3 months ended blah 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 most of the time. So you're gonna divide that by 3. But in this case, it's for the year, so divided by 12. So you're gonna take 19,244,000 divided by 12, and you're gonna find out the monthly cash burn is 1.6 million. After that, we want to look at the dilution, and we're going to start with the warrants. So you're going to type in warrants, and you're going to look for some kind of table. So first of all, what you always want to do is look for a table, and if there is no table, you're just going to have to read through everything. But reading and then looking for the table wouldn't work. You're just wasting your time, basically. So you're going to find out, all right, warrants, and you're going to find out, all right, they have a table. So in this case, you're going to look for the last date, which is December 31, 2018, and they have 5.2 million at an average of 8.32, but you want to be as precise as possible. So in this case, you're going to find out, all right, the warrants are actually from 2016, and they have right around 2.243 at 7.98 and 3 million at 8.5. So that's what you want to write down. After that, we want to look at the other type of dilution. And in this case, you're going to type in ATM, and you're going to find everything right away. The other things that you could type in are basically at, then minus at the, and then market. So in this case, you would find something, or at the market without the minuses in between. But in this case, ATM works fine. So you're going to read through that, and you're going to find out, all right, under the S3, the company may sell up to 75 million of its securities in connection with the S3. The company entered at the market issued sales agreement, so the ATM. And right here, no securities have been issued by the company under the S3 as of December 31, 2018. So now you know they have an ATM, and it didn't use anything since December or in that time, so before December 31st, but from December 31st until now, they theoretically could have, but if you look at the chart, they didn't have any big volume day, which means they are likely to have the full amount or near the full amount as of now, or just before the day it basically diluted, so before Thursday. So that's what you're going to write down. ATM 75 million, non-issued as of end of December 2018. Now, the next thing. So MBIO gapped up and FBIO did too, alright? So when you have two companies from exactly the same sector with the same kind of news and everything, and it starts gapping up at the same time, and they do the same crazy move, you definitely want to check if they have something to do with each other. So in this case, you're just gonna stick with the filing with the most information, so the 10Q, and you're gonna type in the name of the companies. So as you can see right here, that's the other one, FBIO, and it's called Fortress Biotech. And you're gonna type in Fortress, so the same name, and ta-da, you find out that MBIO, so Mustang Bio, is controlled by Fortress Biotech, so the other one. So now you kind of start to get the picture. Fortress is gapping up, and I'm going to show you the filings just after. But as of now, the thing we want to check is how much of MBIO is actually owned by Fortress. If you scroll down and look at everything, that's the first way you could find out how much. So how much is controlled by Fortress. But we're actually going to do it another way. And that's with the Form 4 and 13G. So once you acquire more than 5% of a company, you have to file something called a 13G, all right? So as you know, as you find out right there, they only have two, all right? So the first one, we're just gonna click on it, and we're gonna find out, all right, it's not Fortress, it's City of Hope, it's something else. So we're not gonna look at it, and then we're gonna click on the SC13D, which is kind of the same. And now we find out, all right, which one is it? Right there. Name of the reporting person, Fortress Biotech. All right, FBIO. How many shares? 10.38. And how much is it percentage-wise? 41% of all outstanding shares, which makes it the biggest investor in the company and which gives it the right to kind of do anything it wants with MBIO. So they basically can tell them exactly what they have to do just because they own the most shares and they are the majority holder of MBIO. All right, so now you know MBIO isn't really MBIO, but MBIO is FBIO, all right? Just because they tell MBIO exactly what they have to do. So now that we know that, we need to check FBIO, all right? So let's actually check out the news first. One sec, let's see. So, will it load for me? All right, there it is. All right, so FBIO, as you can see, it's the same news as on MBIO actually. It's the same thing, same news, blah, 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 and both companies are running. So now that you know that MBIO can raise and everything else, we are gonna look at the financial statements from FBIO, all right? So we're gonna do the same process, all right? We're gonna go through the same process, so cash first. And we're gonna look for the table again. So right there it was. So cash, 65 million. So as you can see right away, they have more cash. It's a bigger company, and that's why they own MBIO. So I'm gonna type in 65 million cash as of EOD 2019. 2019. After that, current total current assets, so 111 million, so 111207, and then divided by the total current liabilities. In this case, 5561. 207 divided by 55,614. And we're going to find out, all right, they have a current ratio of right around 2, so 2 current ratio. Same thing, same numbers, 111207, and then subtract the total current liabilities, so 55,614. I'm going to find out 55,500. So 55 million and right around 600,000. NWC. Alright, and after that, I want to look at the accumulated deficit. So in this case, almost 400 million. Accumulated deficit. And after that, cash burn. So to do so, same thing, Control F, and then cash flow. Click on that. And we're going to look at net cash used in operating activities, so almost 100 million. That's for the year end, so we're going to type in 98.8 divided by 12. And they burned right around 8.2 million cash per month, which is quite a lot. Per month cash burn. So actually, here, all right, we had a cash burn of 1.6 for 16 million cash. So they had 10 months. So right here, if you look just only at the cash, you're thinking, all right, 65 million cash, they have more, it's a bigger company, it's better, blah, blah, blah. But actually, with the cash burn of 8.2, they would be out of cash far faster than MBIO, all right? So in this case, it's for at the end of September, so it's 4 months back. So 4 times 8 would be 32. All right, so 32, they have right around 32 million cash left, and right around 4 months of cash left. So they need to start worrying about raising something. And there is another reason why they need to raise right away or pretty fast. So we're going to look at the warrants first. Let's see if they have some kind of table. See. Warrants right there, all right, outstanding as of December 2018. And they have 2.6, oh no, actually outstanding as of December 2018, they have 2.7, but they are not all exercisable, so exercisable as of December 31, right here, 850,000, so let's type in warrants. At what was the price again? 3.28. And after that, we're going to look at the ATM if they have one. So type in ATM, same thing. And yes, they have. All right. So let's see. Assurance, blah blah blah. So they have an ATM. Now we just need to find out how much actually. So just read it through. So nothing about how much actually read there. So we're gonna look past that. So right here, Checkpoint may sell up to 100 million of its securities in connection with the S3. Checkpoint entered into an at-the-market issuance agreement, so an ATM, but we still don't know how much they have. So let's look at that first. Right there. So on August, blah, 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 2016, they started the ATM, so at the market issuance agreement. On August 18th, 2016, the company filed it. So they filed and permit the company to issue and sell shares of its common stock having an aggregate offering price of up to 53 million. All right, so we look at that. And after that, we actually see the sales agreement terminates in August 17 or on August 17th, 2019. So they actually have just about 4 months left to drop everything from the ATM, all right? Everything. Pursuant to the terms of the ATM, the year ended 2000, December, blah, blah, the company issued 2.9 million shares at an average price of for a proceed of 7.3 million. All right, 7.3. So we knew, all right, and after that, no shares were issued under the ATM in 2016. All right, so now we're going to take the numbers, so 53 million, and then subtract the number they already dumped, so 7.3 million. And we find out, all right, they have an ATM, and they have an ATM for 45.780, so 45.7 million. That's the ATM. And we're gonna also write down good until August. When was it? 17th. So they have 4 months left to dump 45 million. All right, because they want to use it. If they can, they will use it, and they really want to use it. It's the easiest way to have cash. All right, and that's the whole picture actually. All right, so FBIO and MBIO are running on the same news. The news, as we talked about before, is based absolutely nothing. So it's shit. It's nothing. There is no good news that would make up for the 260% move. They both need cash. FBIO being the one that needs the cash the most. They have a big deficit, right? They have a big deficit, and they actually can raise. All right, so they have warrants. First of all, they have warrants, and second of all, they have an ATM with which they can dump. All right, so the full picture is basically both companies are absolutely bad. They need cash. They have no news, and they basically are up for no reason. So after that, we want to look at the price range, because the warrants are there, yes, but they still need kind of the price, all right, the price range to dump the warrants. So to do so, we're going to look at the chart, and we're going to start with MBIO. So MBIO was the one that gapped up the most, all right, because it moved from 260 to basically 15 or 16 almost, and opened at 8, all right. So a nearly, I think, 300% move, right around there, on no news at all. So when we looked at it, or when I did the research, it was right around 12. So I thought maybe a small gap down or open at the same price, and that would be it. But we actually kind of gapped down right around there. That's where I entered. So I entered, I think, at 8, so 9.8, just because look at the warrants. The warrants are below, all right, 8.5 and right around 8. So the warrants are, whoops. So if you would draw a line, the warrants are being exercised. What's the price again? I forget it all the time. 8.5 to right around 8, so right here. So that's the price range from the warrants. So everything that's above there is basically a present, all right? It's free. Get in. So I got in right there, wrote it down, didn't cover any, and got actually quite squeezed at the open. But I re-entered later just based on the ATM. So they also have an ATM. Don't forget that they have an ATM that they can dump throughout the day. And yeah, so you know at that point the warrants are below, the ATM is there. They have no news, no nothing. So that's why I load up. FBIO. Gapped up from 145 and moved to $4, 400%. Gap down, exactly the same thing as on MBIO, so also the same move. So once you see both move kind of crazy right away, then deep pullback and kind of grind it up, and then gap down, you know exactly both companies are going to do the same thing. They have the same agenda. They move the same way. All right, so that's a reason why you should load up, but also a reason why you should be careful, because once one is going to spike, the other one will too. At least that's what we thought until the open, because both moved in a different manner. So they both moved down, but not really the same way. But that's caused by the float. So after that, it moves up, and we open right around 2.3, and the warrants are at 3.28. So in this case, the warrants are above, right around there. But at the same time, they have, so the FBIO has less warrants, alright, and they have a big ATM. So they're gonna use the ATM actually. So moves up, heavy, and then just absolutely gets crushed, alright. So I was in right here from 240 something, and wrote it down until 166, which is right there, and I covered the other half at 188. So right in here as it broke down. And yeah, that's it. That's the whole story behind FBIO and MBIO, right? So two companies that are related in a big way. Basically, FBIO owning MBIO, and FBIO just thought, you know what? We have to raise until August because the ATM won't be good. We need the cash. They know, all right, so they have until August to drop the ATM, and they have cash until August. All right, so both things. And they thought, you know what, if we have to put out a press release and pay for that and pay for the dumping of the shares, why not pull MBIO at the same time? And they knew, all right, they also own part of the Bubble Boy therapy and so on, as they own MBIO. And in this case, they're just going to put out a PR for that, push up both stocks, and basically spare a bit of money by doing so. All right, that's it. If you have any questions, leave it in the comments or write me in chat, and I'll see you in the next one.